JRT. And we've then got this one here. What is this? This is the trade log. So now we've got 3 different points of contact for a possible play. If you look at through those points of contact, and we start considering some of the other elements. Now, this is a lot earlier, but I'm just showing you that we've got tweaks that we can cover on these types of trades as well, because this was the retest that we actually, we could actually get involved in, for example, in these trades. But it's, forget about the timing and all that kind of stuff. I'm just saying we've got 3 points of contact for any trade. When we look at what we were actually looking to do here, you found that into this top edge, this is just after the London Open for the original sell. Remember, this is the original sell. You can see here that we got an oil offer watch at 850. Just into that little space there. See it? And if you look at the JRT, and you look through the JRT and you look at these JRT triggers and you look at the 830 JRT and you can see that this is the oil trigger. You'll see that there's been no other oil triggers right through that whole process. You see that? No other oil triggers. And what does the oil trigger say? If manipulated higher than 81.66, look to offer the trade at 830. Look to offer the trade. Here's 830 here. 81.66. There's 81.66 there. And there's the break above the top line. I mean, it's almost telling you what we're doing in this area. It's almost telling you about that movement of money into those types of trades, isn't it? It's almost telling you that there's something going on here that you need to be very mindful of. If they do this, then something is setting up. If they do this, something is developing. If they do this, somebody somewhere is getting on to something in this area. Now, you might be obviously looking at it and you still don't see it. You might be looking at it and you still don't consider that there's enough. And you know what? That's absolutely fine. That's absolutely fine, because you don't have to follow what the trigger is. What you'd have to do is just acknowledge that the trigger's there. You just have to acknowledge that you're seeing something starting to show up on your screens. So when you think about that oil narrative and you think about how this storyline unfolds, you're always just looking for these manipulations. The idea is, if they do this, then there's going to be a possible trade outcome. If they don't do it, well, that's okay. That's just what you would expect to happen. But the point is, you're looking for things that you're not expecting to develop. Ultimately, that's all you're doing, is you're looking for those elements not to develop, allowing you to make that type of trade case. So when you think about you might be saying, yeah, but come on, Ray, it was a little bit cheeky, wasn't it? It was a little bit cheeky. Hold on one second. Sorry about that. So you'll be saying, well, it's a little bit cheeky that you're using a JRT for the second retest on the oil, and you might be absolutely right. It might be a little bit cheeky to use the same JRT for the retest on oil. You might be thinking it's a little bit unfair that wasn't the JRT for that oil, except of course that was the JRT for the oil. There was an exact GRT for exactly that oil trade at exactly that price. And obviously, it's just about recognizing that it was happening. It was about recognizing that it was actually going on. So let me show you. So I've taken another screenshot of another GRT. If manipulated oil higher than 81.88, look to offer. 11.30. The top edge was put in at 11.30 and 45 seconds. At what price? Oh yeah. At what price? 81.88. Okay, so we did say if it's manipulated higher than 81.88, we should sell it. It traded exactly 81.88. So yeah, okay, you might say, well, it never happened, did it? It never generated a trigger. Well, you're not waiting for things like this to generate triggers. You're waiting for the order flow to generate the trigger. You're waiting for the order flow to generate the trigger itself, aren't you? That's what we're looking for in these areas. And that's what that offer watch came from at 10:55. That was that offer watch that we were talking about in that particular narrative. So we had those elements. We had the trade log. We had the tweet. We had the JRT. So obviously the idea there is we're trying to figure out what elements we need to see as traders to figure out that all of this ties in. All of these elements tie in together, giving us the right trade at the right price. So we've got the tweet, we've got the GRT, and obviously that leaves us to look for the trade log entry to see if we were still getting that trade log entry at that particular point where we're getting offers on the trade log. Now, obviously, that's again, it's one of those things that, well, what kind of offer are we looking for? What type of trade are we considering? You know, we've obviously got to try and do a little bit of work to try and figure out what kind of value we have into those trade areas. Well, yes, we got a trade log. Interestingly enough, we got a trade log. Let me show you. So a lot of people look at these things, and it's always nice to kind of catch them, you know, thinking, but that doesn't tie in with this and it doesn't tie in with that. Look, these are all now the exact trade. These are all now exactly the trade here. So there's the trade log. This is the second trade. This is not the same trade, by the way. So this is the trade log. This is the tweet. This is the JRT. And you can see 11.30, 10.55, 11.30. Oil offers expected into liquidity pools into aggregate demand, giving us the perfect narrative. Sell side only. And obviously that sell side only business it's not turned into anything special. It's not turned into sensational stuff. But you know what? It's still pretty damn good, I think. It still ties the story together for what ultimately ended up a move of 25 ticks. It ended up a $250 move, considering that these are automated responses to certain things that are happening on the screens. It's not one piece of information that then builds into this, is it? It's a series of pieces that build into this. Then it's the order flow, the fresh air narrative that builds into this top edge here, because the book was still pumping. The book was still trying to spoof the buyers to come in, wasn't it? Desperately trying to get somebody to buy into the top edge, somebody to run the stops. But it never happened because it was fresh air. It never happened because it just never happened. There just wasn't anybody willing to be stupid enough to get involved in that as a buy trade reversal. So we can recognize the quality that we try and present in here. We're basically top ticking the oil market. Think about that, guys. Top ticking the oil market. This is what we're trying to understand about every market we look at. Is there's a building up phase of information that we try and look at, we try and think about, we try and understand. And when we understand it, we look at it, we think about it, life becomes really easy because that cell is pretty much the same cell as the last one, has the same characteristics, different price. Because when you look at it on a normal value chart narrative, you can see that was the first sale. Very, very nice outcome. And obviously that set up a very, very interesting top line. And then we got a sale coming in, but I never got the value in the second sale. I got the value coming back in on the third sale, which was that one we've just talked about at 88. So the second sale came in here. We've got that offer already in the background. And the final sale, the second sale, came in at that point. And obviously traded down to this beautiful little RGL level, bag and tag some monies. As you probably know, bag and tag some monies. And it looks on the face of it to be absolutely spot on. And we check our other values. And when we check our other values, we can see we've got that blue over red narrative on both the supply demand line and the Brents. And we've got the blue over red line in the supply and demand line and the Brents again here. Beautiful. A very nice sell-off. 2 trades, somewhere around about 500 on the first trade, 250 on the second trade. That's a $750 morning for oil traders this morning on 2 very clear, very specific, very triggered trades, one of which was tweeted because obviously I'm at my desk now and I'm able to do tweets as opposed to being on my own desk, my working desk. So I can't do tweets at 8:30 in the morning. But it is one of those elements that with the trade log and with the JRTs, you don't necessarily even need to see the tweet anymore because it's telling you that there's an offer watch in that price area. That's telling you that we're looking for that bit of business in those price areas. It works when I'm not working at the Twitter. It's still working in the background, giving you basically almost 24-hour coverage of what's going on in the marketplace. And it's not a trigger to trade, it's a trigger to look. That's all it ever is, correct? It's a trigger to look. And that's what we're obviously starting to recognize through this little process. Beautiful. Beautiful little process, beautiful little outcome. And as I said, a $250 outcome on that trade, which is absolutely fantastic.